ground and it go off. Yeah, hit the ground and it go off. Yeah, run it. Ooh, I really feel it's my time. Think it's my year. Yeah.
Yes, boom. Good morning. Happy Monday, everybody. Welcome to the morning show, the best morning show in finance. Spencer Israel. I've got JC Parets here. We've got you. Good morning, everybody watching on YouTube and Twitter. Hope you all are refreshed and ready to go because it's earnings season, baby. But I know that's not what you do. You don't care about that. Some people care about that. JC, who's waiting backstage here, does not care about earnings season. He cares about what's happening in the 10-year, what's happening with the NASDAQ. He's got charts at the ready. What else we got today? Craig Johnson is today's guest, master technician, chief technical strategist at Piper Sandler. He'll be on the show at 9. Kimmy Sokoloff at 9:15. As always, we'll be talking about the hot corner, the chart report. We'll take questions from the chat. And that's what we'll do. So do me a solid if you're watching on YouTube. Joe, Ken K, good morning. Just drop me a like. Hit that thumbs up. I'd appreciate that. I've got JC here. Let's get started here. It's the morning show. How was your weekend, sir?
Good morning.
How was your
weekend?
What's
happening? Oh, just nice to be back from the beach.
Yeah.
It does feel good. As much as I love being at the beach, being back home, it's this is where I am, this is where you feel comfortable. Like this is it for me. So I'm happy to be back on the morning show with Spencer Israel. The boys are still in Asia.
Oh my gosh, one more week
and a half-ish, right? So they still got another 10 days or so. They are on city number 5. So Sean, for those of you who aren't aware, Sean and Strazza have been out in Asia with a film crew, interviewing some of the best traders out there. They were at Jim Rogers' house in Singapore. They were at the Bursa Malaysia. Today, they're with Nikki Yu over in Manila in the Philippines. They just got there a couple days ago from Bangkok. Prior to that, they were in Vietnam. Next, they are going to...
Taipei.
Where are they going next? Taipei? They're going to Taipei next?
Taipei is next, followed by Hong Kong and Tokyo.
Saving the best for last.
I was not going to say it, but I'm very curious to hear which of these cities is their favorite. We'll find out next week.
So far, it's Vietnam. Although Riley last night was like, Manila's my favorite. I'm like, really?
Wait, so maybe I should know this, but I don't. What day do they actually get back?
I think next Wednesday.
Wednesday, okay.
Next Wednesday, I'm pretty sure.
All right, yeah.
But they're having a good time. They're learning a lot. You should hear some of the things these guys. They were at a kickboxing competition, professional kickboxing in Bangkok a couple of nights ago. I don't know if you saw that.
We told them you must go to obscure sporting events while you're over there. So I hope they
kickboxing so obscure.
Professional? Is that what you said? Yeah.
I suppose so. All right. Well, listen, we got a lot going on in the market. We have been, I don't know, the biggest bulls on Wall Street longer than anybody out there. Really since last summer. We're 13 months into this bull market. A lot of investors keep asking me when the bear market's going to end. I'm like, bro, where have you been? So the market has obviously paid us very well. Anybody following along has been paid handsomely. So kudos to all of you. However, what does that mean for the next for the next few months of the quarter? What does it mean for the rest of the year? Very little, right? We try to stay away from anchoring bias, right? I bought the stock at this price and we're so far, so I'm still up, even though it's down 20% this week. I'm still up. Like, no. So we don't want to think like that. We want to move forward. We want to be responsible. And some of our targets were hit last Friday there, Spencer, and started initiating some short positions there, Spencer, and that's not really anything that we've been doing for a while. We've been finding ourselves taking profits when sort of like when we have to, because our options are expiring, right? Not so much because upside targets are being met or whatnot, but a lot of our positions are being executed through options, even though the stock market, we're looking at the underlying to make these decisions. A lot of our execution is through the options market. And, when they expire, we get out, right? We could roll it over, but we've gotten out. We didn't have to sell anything last week, and we did. And started initiating short positions. So what do you say we get into that?
That's interesting. I also sold my Mattel last week. That was just a short swing trade. So we both did some selling, but still bullish, I think. Let's find out. State of the markets.
All right, so the first thing that we want to do is we want to zoom out a little bit, right? Whenever in doubt, zoom out. And, it's not about finding a strategy and forcing that strategy on the market, regardless of the type of market environment we're in, right? That's silly. First thing we want to do is identify what type of market environment we're in, and then decide which tools and strategies are best for that type of market environment. So if you have a strategy that goes long volatility, for example, then in a high volatility environment, you're going to get destroyed, right? Because volatility premiums are so expensive, right? And if you have a strategy where you're selling volatility and volatility is low, you're not going to make much money, and you're going to get chopped around, and that's no good either. There's a time and a place for everything. If you think that buying gold is a good idea, it might be if gold's going up, right? But if it's not going up, then that's not a good idea at all, right? Again, there's a time and a place for everything. There's certain stocks that tend to do well when interest rates are rising. Certain stocks tend to do better when interest rates are falling. So if you're just buying one group of stocks, regardless of what the bond market's doing, half the time you're going to be incorporating the wrong strategy, right? So first thing we want to do, what type of market environment we're in. The next thing we want to do is then decide which tools and strategies are best for that type of market environment. Are we in a trending environment? Are we in a sideways environment? Different strategies, right? Different strokes for different folks, right? Is what they say.
That's what they say,
right? I don't know who says that, but I believe they do say that.
They say it.
They say it. All right, let's get right into it. Let's first zoom out, and regardless of what we were doing on Friday, regardless of some of our upside targets being hit, what are we seeing? We're seeing the Dow Jones Industrial Average and the Dow Jones Transportation Average going out at new 52-week closing highs, Spencer. New 52-week closing highs. For you Dow theory enthusiasts, this historically is not evidence of a downtrend. Quite the opposite. But we've already been in the camp that stocks have been in an uptrend for quite some time. So this, number one, is not really surprising. Number two, it doesn't really impact anything that we're doing. It's not like, oh my God, this came out of nowhere. Wow, the Dow Jones Transportation Average and Industrials are making new all-time high or making new 52-week highs. Like, this came out of nowhere. No, it didn't come out of nowhere, right? This has been happening for quite some time. It's just that now they are literally both making new 52-week highs. But this has been a process. It didn't just happen right off the bat. And contrary to popular belief, it's not just 5 stocks or 7 stocks or 10 stocks. Here's the equally weighted NASDAQ 100. So taking out the Apple market cap and Amazon market cap and Google and Meta and all these things, and literally equally weighting them. And what do you know? Also making new 52-week highs, which mathematically would be impossible if it was only 5 stocks or 7 stocks or 10 stocks or even 20, right? We know it's a lot of stocks. In fact, if you just take the New York Stock Exchange and the NASDAQ, right, and take out anything lower than small caps, right? So like legit companies on the New York Stock Exchange and NASDAQ, you have over 1,200 companies that are outperforming the S&P 500 this year, right? 1,200. So when you're like, oh, the S&P 493, like what kind of serial killer thinks like that? S&P 493, what are you talking about? 1,200 stocks, over 1,200 stocks. Legit companies on the New York Stock Exchange and NASDAQ with real market caps are outperforming the S&P 500, right? So it's not 493, it's not 7, all that stuff is nonsense. We're talking about thousands of stocks all over the world ripping in your face all year long, right? That's what we're seeing. And if you think it's not that, then I would, I don't know, maybe learn how to count again, right? Maybe you forgot how to count, I guess. I don't know.
You want to know how I know it's not that? Because I saw an article over the weekend in the Wall Street Journal that said it's not just 7 stocks going up.
Even the Wall Street Journal's figuring it out, right? Hey, how about that?
Someone's got it.
One for the WSJ. All right.
Hey.
So I initiated some short positions in Meta.
Oh.
In fact, not even at the close on Friday, actually in the after hours market. How about that there, Spencer? I wanted to make sure that I was in before the weekend. Not that it ended up mattering much, but I did feel I want to feel much more comfortable, you know, being not having all the long exposure that we've had. I mean, we have been irresponsibly long for quite some time, and that has worked out very, very well for us. And it just didn't sit well for me going into the weekend. Let's talk about some of the things that we've sold. Meta, for one, this was the best trade of my entire life, right? From the long side, if you guys recall. And to reiterate that I'm not in the business of marrying these companies. I really couldn't care less. Meta could go to zero tomorrow. Doesn't matter to me one bit. Or to 10 trillion. I'm good either way. It doesn't matter, right? It has nothing to do with Zuck or Elon. I mean, listen, do I want a cage match? I'm not going to say no.
Oh, yeah.
I'm not going to say that I don't want one. I mean, I feel like this would be like such an internet moment, cage match between Zuck and Elon. Like, that would be pretty epic. And you guys know me. I'm not into like all the gossip and all the nonsense that goes on Twitter and stuff like that. But a cage match, Elon and Zuck, I got my money on Zuck personally. I mean, no political biases here at all. Just call. I mean, this dude's training, but Elon's a lot bigger than he is. I don't know. I'm pretty sure both of them can kick my ass. So I'm not really, I'm not really one to talk. So I really like Meta from the short side below 300. Because that really filled that gap over there that we saw in early 2022. That's a big level. I really like it short below 300. We are not below 300 currently. But if we start breaking below 300, I'm going to be adding to short positions. I went out there. How much did I short? I think I shorted I don't know, maybe a decent amount. Let's just say I shorted a decent amount. And I'll be adding to those short positions and we break 300, maybe got another 40, 50 points to the downside. So this is one that's overextended. If interest, we're going to talk about the bond market now, but, if we start to see some interest rate volatility coming back, we could see some sort of, whippy action in technology stocks, maybe see some correction and growth in general. Because technically, Meta's not even a technology stock. It's a communication stock. It's a mega cap growth name. So just kind of keep that in mind. So started shorting Meta. If we start taking out those highs, we start getting above 312, 313, all bets are off. I will not, I don't plan on holding that short very long if it starts moving against me. So just keep that in mind. The other thing, if you want to scroll all the way down towards the Bitcoin chart, sold all my Bitcoin too.
Oh, I was going to ask you about this because we've been talking about the $30,000 level and the $32,000 level,
Yeah.
and it's holding the 30, but it can't seem to sustain any rally.
Yeah, I own no Bitcoin. How about that?
Wow.
I know. I'm an investor in a hedge fund that's got some Bitcoin exposure, and other than that, I got nothing. This is it.
You sold you went from wanting to be irresponsibly long to selling all your Bitcoin.
So I try to pride myself, Spencer, in keeping an open mind.
Yeah.
I am not perma anything. I am perma open-minded, if anything.
Right.
People, I've been on Twitter for 15 years now, and I've been in this business for over 20 years. So 3/4 of my entire career has been live on Twitter, sharing my thoughts. And one thing that's consistent about the Twitterati there, Spencer, is that in bull markets, I'm regularly called a perma bull, and in bear markets, I am regularly called a perma bear. Right. The people who have been following along, those of you who've been following along for a long time know that I'm not perma anything, but there's always newcomers that don't know me at all. And they're like, this guy is always bullish. No, asshole. It's not that I'm always bullish. It's that the market's been in a bull market for over a year and we've been buying stocks because to not be doing that would be stupid. Right. In bull markets, go back. I encourage everybody to go back and study every bull market in history. You know what you're going to find? You're going to find that investors tend to be rewarded for owning stocks, not shorting them, right? So what have we been doing this bull market? We've been buying stocks because why the hell would we not? And then in bear markets, we're selling stocks, we're shorting stocks. It's not that we're perma bears, is that historically in bear markets, you make more money with stocks falling than you do trying to bet on stocks rising, right? It's a function of the environment. Again, getting back to my earlier point, we want to first identify the type of market environment we're in, and then decide which tools and strategies we want to be incorporating.
Okay. So back to the Bitcoin.
The fun police is like, well, get to the point, Jason.
Well, yeah. I mean, we're going in circles here. So let's
4 weeks in a row.
Let's get 4
weeks in a row, Spencer. Bitcoin fails at 31. 4 weeks in a row. That's just not for me. There's one argument that the more times the level is tested, the higher the likelihood that it breaks. Yeah. And then there's also way too much overhead supply to get this thing going. And you know what? Maybe Bitcoin breaks out this week above 31 and we start seeing 32, 33. Maybe it happens this afternoon. I have no idea. What I do know is that we got more good news coming out of cryptocurrencies and Bitcoin than we've seen in years, maybe ever. I don't know. And yet Bitcoin can't break out above 31,000. So a lot of these sort of Bitcoin alternatives, things like MicroStrategy, things like Mara, Riot, all of these things did very, very well despite Bitcoin not breaking out. So it's kind of one of those things where, take your money and run. I mean, for me, you guys can, I don't tell anybody what to do. You guys do what you want. But for me, it was kind of like, take your money and run, be patient. And this is one of those things where I'm being bougie, Spencer. I'm being bougie because you could cheap out, right? And stay at a cheap hotel, right? And you're going to save some money, but you're going to pay the consequences of that because they're not going to have the iron, they're not going to have the room service. They're not going to have the nice restaurant in the hotel. You got to go to a nicer hotel to go to the nice restaurant. So you're going to pay the consequences of being cheap. However, if you pay a premium and might say, oh, we're overpaying for this hotel. Well, there's going to be a lot of benefits. There's going to be a spa in that hotel. You can get a sensual massage, right? You can go to, there's a nice gym, the great room service, the bougie restaurant.
What is the point?
The hotel.
What is the point here?
The point is that's what I'm doing with Bitcoin.
Okay.
I'd rather pay more, knowing it's on the way up, knowing that I'm going to overpay, knowing that it's on the way up and have that advantage, have that better experience, if you will, versus being cheap, owning it before the breakout, and then suffering the consequences of getting whipped around for no reason and maybe even taking a 20-30% drawdown, right? That's no good. And that's what you get for being cheap. Like, again, I'm talking to myself here. I'm not like preaching. I'm just reiterating my thought process to myself. So because I am being bougie here, I am willing to pay more to know that the trend is higher versus sitting around getting chopped up. Meanwhile, Mr. Spencer, Marathon hit our target on Friday, right? The target was 20 for a very good reason. Throw it up, Fonz. The target was 20. I was last week live on the show. I'm talking about, the target was 20, but Bitcoin hasn't even broken out yet. So maybe I'm going to be a little patient with this one, right? No. Got rid of the whole thing. Emptied out all the accounts. No Marathon. Remember, I owned the January 30s. I owned the January 14th.
Dear Lord, you were busy on Friday.
Everything off the table. Done across the board. I have no exposure whatsoever to Bitcoin or any Bitcoin alternatives. Like I said, I've got some hedge fund exposure. Maybe 5% of my entire net worth is, has exposure to cryptocurrencies.
I just want to be clear about those. I just want to be clear about something. This does not make you bearish Bitcoin. It just means you're not convinced that it's going to go higher in the near term.
Listen, if I was bearish Bitcoin, then I would be short. Right? So I'm just not going to sit around waiting, letting my portfolio collect dust. There's better things. I'd rather, this gets back to sleeping at night. Why do we do this, Spencer? We do this to make money so that we can live better lives. We can go on nicer vacations. We can stay at those nice hotels. I can go to the beach with my family and spend a fortune, on a trip because it's not a vacation when you have 3 kids under 3. I can do that because of the decisions that we're making in the market. But if the decisions I'm making in the market are not allowing me to sleep well at night, if they're not allowing me to live a good, healthy lifestyle, then I'm too big. I'm overexposed, and that's no way to live your life. We don't live to work. We work to live. And honestly, I didn't want to come into this week, spending the weekend thinking about my overexposure in cryptocurrencies. I didn't want it, Spencer. I didn't want it. I'm out. And if and when, and I think it's a when, not an if and when Bitcoin is back above 31,000, actually sticks the landing, which could be today, could be in a week, could be in a month, could be in 6 months, could be never. I have no idea. I think it will likely happen sooner than later. And when that happens, I will put a lot of exposure back on. We'll figure out at the time what to do with that. Like, what's the bet? Do we buy Riot? Do we buy more Bitcoin? Do we buy, like, right? What is the move right now with Mara under 20, Bitcoin under 31? I like heavy cash positions, and I'm putting my money where my mouth is, or my lack of money where my mouth is, right? I'm not, no exposure at all.
To put it another way, I also like analogies. You are very content. In fact, you'd prefer to not be the first person to the party. You don't want to be early to the party. You're happy to be late to the party, so long as you know that when you get there, the party is bumping. That's all you care about.
Oh, that's right. That's right. See, back in the old days when we were young and broke, we would get to the clubs like at 8 o'clock at night, so that by the time the party actually got going and they were tougher at the door, like we were already in. You know what I mean? It was kind of one of those things because we were like too young to be in there in the first place. You know, couldn't afford, right? Like, so we were just there already by the time that the party started. Like, that was kind of like our move. This is like the opposite. Like, I'm already VIP. I can show up when I want. They're going to let me in. It's all good, right? It's kind of like one of those things. I'm going to buy a bottle. Like, it's good. We got this, right? You see what I'm saying? It's different.
Okay. All right. That wasn't quite where I was going with that, but sure. I think the takeaway here is that JC.
You didn't grow up in Miami in the late 90s.
No, I did not grow up in Miami. I did not grow. That is definitely true. Okay.
I got one more for you. One more. And another reason, why I'm cautious is because I'm expecting a high volatility event coming in Bitcoin. And I'm glad that we got Craig Johnson in there. He likes it when I tell him, how good of an analyst he is and whatnot. So I don't want to make his head too big, but Craig Johnson is definitely one of my favorite technicians out there for sure. Don't tell him I said that. I want to hear his thoughts on cryptocurrencies in general as well, because he's got some opinions. I'm thinking a high volatility event is coming here in Bitcoin soon. We're looking here at the Bollinger Band width, right? So from volatility contraction tends to come expansion, and volatility has contracted to levels we've only seen a handful of times. And, investors tend to forget how markets work, right? They're so busy worrying about the Powell or the Trump or, the inflation or whatever, the sequestration or the taper or whatever the gossip columns are yelling about that week. And they fail to remember that asset prices trend. We know that. We have the data. It's not random. The random walk theory or hypothesis or whatever, the efficient market, all of those were theories and hypotheses. None of them are true, right? They were all proven to be not true. We know that asset prices trend. We know that momentum exists, right? Like, these are real things that actually exist in nature, right? Like, it's 1 + 1 = 2. Like, we know. What we also know is that volatility tends to mean revert, right? High volatility tends to come down. Low volatility tends to expand. We know that. What's funny about humans are a funny bunch. What's funny about humans is that humans tend to act the opposite, right? They're always looking for mean reversion strategies. Oh, it's overbought, JC shorted. Oh, it's oversold, we have to buy it. And then in volatility, they think, oh, high volatility means even higher volatility is coming. Low volatility, oh, it's going to be low volatility forever. It's like, no. Volatility mean reverts, asset prices trend, act accordingly as investors. That's how I look at it. So from volatility contraction in Bitcoin, I'm expecting some kind of volatility expansion. And if that volatility comes with downside prices, I don't want to be in it, right? These things are going to get freaking smoked. So it's not for me. Maybe the volatility is going to be to the upside. Maybe it could. It's happened before, right? It happened before a lot, actually. So we can see volatility expansion to the upside with prices going up, no doubt about it. So I'm going to keep an open mind. I really don't care. Bitcoin can go to 0. Doesn't matter to me at all. Bitcoin can go to 1 million. That's cool too. I'm good either way.
Wow. All right. I didn't see this coming today.
Gotta keep you on your toes, Spencer. Gotta keep you on your toes.
Keep me on my toes. All right. Let's we're gonna have Craig Johnson on in 5 minutes. Before we do that, let's do a little bit of what's moving here. Talk about what's hot this morning and why, and then we'll bring on Mr. Johnson. All right, we got to talk about Tesla here this morning. I'm going to bring up this this tweet. There it is. Tesla tweeting over the weekend. First Cybertruck built at the Gigafactory in Texas. Cybertrucks are coming off the assembly line like 4 years after they were first unveiled. This is going to be what people are talking about today, like it or not. So Tesla is, last I checked at least, was up in the pre-market session and is going to be trending, is going to be doing all that stuff throughout the day today, I'd imagine. If anyone is interested in pricing details, I do have them for you. These things are going to be expensive, man, but not as expensive as some of the other EV trucks out there, which I guess is probably something in Tesla's favor here. But what do we have here? We had it's
we
gonna
probably have another good short.
Maybe.
Yeah.
Yeah, potentially.
Yeah.
How do
you feel about that, Spencer? You feel comfortable shorting Tesla?
Oh God, I mean, jeez, Tesla scares me from both sides, honestly. I don't even know if I've ever owned Tesla outright. I don't think I have. I've just owned it via ETS. That thing moves so fast. I don't know, man. I'd definitely be
like Meta. That 300 level is a big one. If we're below 300, that puts us below those August highs. Those are also the January 21 highs. A lot of market memory right here under 300. If it's over 300, I'm not going to be shorting it, but let me tell you something. That 300 level, if we're below 300, for a short trade down, I'm open-minded. I don't have any position here. Thinking about a fade here on the Tesla. Thinking about it, considering.
All right, that's interesting. The tri-motor all-wheel. These are predictions, by the way, from some Tesla analysts. He's thinking the tri-motor all-wheel drive for the Cybertruck will come in at around $80,000. Lowest end will be at $50,000. Rivians go for like $75,000. I don't know. Anyway, the truck is what it is. I think it's pretty ugly, but the stock is a whole separate animal. I would think, hasn't been always been the case, but I would think correlated with the rest of the market, seeing as how large it's gotten. But
Listen,
I guess we'll find out.
Consumer discretionary is the best performing sector over the last 13 months. This entire bull market has been led by consumer discretionary, not technology. It's been discretionary.
Yeah.
Up 36% on an equally weighted basis since this bull market began exactly 13 months ago yesterday, as a matter of fact.
Yesterday, right.
June 16th. Yesterday was July 16th. So today is my sister's birthday. Happy birthday to little sis. With consumer discretionary being such a leader, if this market, we're going to see some corrective action here at all. You could see it in some of these leaders. I don't own any Tesla. If we start to fail around here, around 300, I will be keeping a very close eye. Look to initiate some short positions here. Again, temporarily. These are all tactical opportunities. It doesn't mean that I think the bull market's over. It doesn't mean that it's the end of the financial system as we know it. It doesn't mean that the Fed ruins everything. It doesn't mean that it's just a trade, right? No big deal. It's all good. No big deal.
Tactical trade.
Tactical. We got those, Spencer.
Tactical shorts. Man, this week has not started off the way I thought it would, but that's why I want
to hear what Craig Johnson has to say. You know why? Because when all these perma bears are crying all day about the Fed or whatever, Craig Johnson's been pounding the table to buy stocks. So him and I doing a little fist pumping, talking about how we're buying stocks when everybody's telling us not to. It feels pretty good. And now I got to tell you, I'm getting a lot of compliments, Spencer. Getting a lot of compliments. I was talking to Tom Lee over the weekend, and we were talking about how him and I are getting a lot of compliments. Too many.
Tom Lee has been getting exorbitant amount of praise lately.
That's right.
On Twitter.
So he nailed this for sure. Say what you want about prior cycles, whether he nailed it or not, doesn't matter. I'm talking about simply from a sentiment perspective. This guy's gotten so much hate, myself included. And now everybody keeps telling us how smart we are and how great we are. And that doesn't sit well with me. So I was talking to Tom. I'm like, started laying out some shorts. Tactically, again, just tactical. It's all good.
All right.
Why don't we hear what Craig Johnson thinks?
Let's bring on Craig Johnson, Managing Director and Chief Market Technician at Piper Sandler.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
There he is, Mr. Craig Johnson.
Morning, gentlemen. How are you?
Never been better, man. Never been better. Raging bull market.
It's a raging bull market. Spencer, you're talking about the Tesla truck. Let me tell you where my mind is at. Look at that right there. See that on the wall behind me?
What is that?
A little Ford Bronco. That's the real truck. Forget this Tesla.
Dude, I like the Bronco. My wife hates it.
The Bronco is where it's at.
Okay. You know what? It's a nice looking truck. It's a nice looking truck.
Do you have one? Do you have one, Craig?
Absolutely. And I love driving that around, but no top on. Take all the doors off. People look at you like,
So no one wants to see you without your top on. All right there, Craig?
Well, some do. Some do. Now, you guys were talking about cryptocurrencies, okay? So there's a big event coming up starting in about 20 minutes. The Atlantic Council is hosting two congressmen, Jim Himes, French Hill, and they are going to be discussing the future of stablecoin payments and that kind of analysis. So I think that's going to be a pretty important news driving event today. And from, my perspective, as I look at this market and I think about cryptos and everything else, I still think, JC, I hear you on the short-term overhead resistance there, 30,000 level on the BTC, but this is not going away. Okay. And the reason I think it's not going away is, number one, Fidelity has not dropped their cryptocurrency program whatsoever. Second, BlackRock is still trying to file a Bitcoin ETF. So there's some big players out there that are still doing things. Then if you also take a strong look at what you see happening with Coinbase, that lawsuit last week, stock was up materially last week. And when you look at a chart that's in motion, Coinbase is clearly in motion at this point in time.
Listen, no one's talking about Bitcoin going away, all right? For the record, Craig Johnson, technician extraordinaire, Piper Sandler, the whole thing. Craig's a crypto junkie behind the scenes. A lot of you, I know that because we hang out, we talk about this stuff. But for other people who don't know, like, you got your day job. Let me ask you this: how much of this stuff infiltrates your day job? Like, how much do your institutional clients ask you about this sort of thing?
Institutional accounts are not at all asking about cryptocurrencies at all anymore. None, zero. It isn't even on the radar for them, which to me is a good sign that it's not on the radar whatsoever with them right now. And yeah, I've been a cryptocurrency junkie for years, as JC knows. In fact, we run mining operations. So yeah, we're there.
Aren't you heating your home with your mining operation? You still doing that?
We do in the winter. We don't need to do it in the summer, but yeah, we still have machines here. And
you guys how long does that summer last there up in Minnesota?
Well, it's about done. No. In all seriousness, it's been a beautiful couple of days. If we could just shut down these, forest fires in Canada, we could actually, enjoy some nice fresh air and clean skies.
Craig, I asked. We're installing a pool. We're installing a pool in the backyard, and my pool artist guy, like, he's a little bit of a degen himself. And I'm like, okay, so here's what I want to do. I want to get the Bitcoin mining operation to heat the pool, right? Like, that was my thought. I'm like, I saw this YouTube video about it. My boy Craig in Minnesota is doing his thing. This guy thinks I'm crazy. He's like, JC, we're not doing that.
You're not crazy at all. In fact, there's several people that I've talked to that have run hedge funds up in Connecticut that have been basically running crypto miners with a heat transfer pump to literally heat the pool. And that does work, and people do it. So might as well do it.
I told him that we can. He told me not to. Okay. Okay, so Bitcoin's not going away. Cryptocurrency's not going away. I'm not going to argue with that. I'm confident that you're absolutely right. from a tactical perspective, four weeks in a row, failed at that 31. I'm out completely. I own no Bitcoin. I own none of the derivatives, the ancillary trades like Marathon. We owned a ton of Marathon, everything like that. When Bitcoin proves it can hold above 31, it can stick the landing, then we'll reevaluate and I'll get back in. In the meantime, Mr. Craig Johnson, raging bull market. 13 months ago, the list of new 52-week lows list peaked. And, over many years, we've had plenty of conversations about it over the years, talking about market breadth, talking about the fact that this is a market of stocks, not just a stock market. While someone like yourself and me, we look at the S&P and the Dow and all these things, there's a lot of stocks out there. So here we are, S&P, what are we sitting around, 4,500 or so?
4,505.
So talk to me. So what's the back half of this year look like equity-wise?
Well, JC, you're right. And you do get compliments, certainly, from the perspective that you've been bullish on this market. And it's been a very painful time to be bullish on this market. All the economists, all the fundamental strategists, they've all been tremendously bearish. They're looking for this recession. The recession may be coming, but, as Tom Cruise said in Top Gun, you may be a dinosaur, but not today. And the recession is not coming today. The economy is still pretty healthy. You're still seeing good GDP growth. Jobs are still there. So this recession seems to continue to keep getting kicked down the road at this point in time. So, JC, last year we laid out a 46.25 year-end objective for the S&P 500. We're 2 and change percent from getting there. The question that all your listeners would want to know is there upside? Yeah, I think there's upside. And when we hit our price objective of 46.25, we'll probably be checking and raising, if you want to put into a poker analogy. So from our perspective, this bull market may have a little bit of backing and filling over the summer months, but that's going to be an opportunity to allow the bears to enter this tape for another move higher. And again, it's been painful for those that have been watching this market from the outside. And think about the best trade that people had at the beginning of the year. They were out there buying CDs and treasuries, picking up 4, maybe 5% short term. They've been left in the dust. And there's going to be a lot of money coming off the sidelines and coming back to work, JC. So this market is not done. And I could see another 8-9% upside into the year end.
Yeah, that trade, it's so funny you bring up that trade. Like I got venture capitalist friends that are buying bonds, when it was such a no-brainer to buy bonds to get that yield, that was the worst trade you could have actually possibly put on, right? You wanted to own stocks, not stupid bonds getting 5%. Are you kidding me? You guys are bull market. Right. These things are moving 5% a day, some of these stocks. Are you kidding me? Come on.
Yeah, I mean, JC, you also have to think about what's going to play catch up here in the second half too.
Took the words right out of my mouth. What do you like in the back half?
See, we're in sync with each other. Like we can read each other's minds.
It's almost like we were trained similarly, right?
Yeah, we might have been. Maybe the Godfather spoke to both of us. You don't know. But what I think is going to ultimately sort of happen, and if you look at a very simple ratio chart, looking at large versus small. So take the 100 divided by the 600. What you're starting to see is the larger cap names. Now they're not rolling over and like going to collapse, but they may just consolidate sideways. And on a relative basis, if they do underperform, then I think you got a good, strong opportunity for small mid-cap stocks to play some catch up. And if you break apart the Russell 2000 index, you'll see that it's not only financials, it's healthcare, and it's also industrials that are the main components or the largest weights, I should say, inside of that index. And if we can get through this earnings season, and if JP Morgan and Bank of America and Citigroup and their earnings reports are any sort of indication of what the financial sector is going to look like, the Russell 2000's got a solid shot at breaking back above that 2000 level. And if it does, I think there's going to be a lot of people that are going to be chasing that mid-small cap stocks into year end.
And what about like certain sectors that just don't have large cap exposure, right? Like when you look at a lot of these industrials and there's a ton of, and for me, quickly, we changed the rules on what's a small cap and what's a mid cap. A small cap, 300 million to 2 billion. It's been like that my whole career. And you're a lot older than I am. So has it been like that? Has it been like that your whole career too, Craig?
I mean, JC, I'm not that much older than you. I mean, let's be clear here. I mean, I mean, we got to put that into perspective. At
You
age
are
52,
exponentially right now.
oh, yeah.
Inflation adjusted, you're off the charts.
JC, if
Craig.
you're not careful, you're going to catch him one of these years.
Hold on, Craig. Seriously though, right? I mean,
The definition of small cap.
yeah, I mean, 300 million to
so-
2 billion, that makes no sense. 10 billion is a large cap. That makes no sense. So we changed the rule. It's 1 to 4 for small caps, 4 to 30 for mid caps. How do you feel about that?
So, well, I think that's for me. I changed the small caps, and I have small caps between 500 million and 2 billion.
I don't think you changed it enough. I think if you're not at $1 billion, like, you're useless.
Okay.
Right.
And then in mid cap land, we have, and then hang on, micro cap, we've considered 100 million to 1 billion.
I'll give you
gotta
that
keep
one.
it-
I'll give you that one.
You got to keep in mind that for a lot of these institutions, JC, they're running billions and billions of dollars. They need liquidity. And your biggest problem is you keep going down in cap is liquidity.
Yeah.
There's just not enough of it there to be able to put these trades on without materially moving these things. I mean, some of these institutions might take, they're not going to get the trades done in a day. Let me put it that way. It might take them a week. It might take them a
Or
month.
longer. Yeah, exactly.
Patient, but depending on how patient they are to ultimately sort of get into these things. And then in terms of mid-cap land, we have defined mid-cap as kind of 2 to 10 billion
No,
is how we sort of
not-
defined it over
10
time.
billion is just not a large cap, Craig. Like, these days you got multi-trillion-dollar companies. I think 30 is a good number because it could still triple before you get to 100.
100% agree. But, again, these institutions want to leave themselves enough room to be able to sort of buy what they want to buy. I hear you intellectually on your discussion of 30 billion or higher. You could probably even come back and say 100 billion. I mean, you could certainly move it up. There's no question about it. But again, it comes down to liquidity and leaving these portfolio managers enough room so that they can buy some of these things. Because if you start looking at a breakdown of all of the companies, when you break it actually down by market cap, which we've done over the years, you find out that you don't really have that many companies that are going to be even north of 10 billion, JC. So you start raising it to 30, you've lowered down the bar so far that how many companies are these PMs really going to be able to go out and buy? Does that make sense?
I think we're going to need to continue this conversation because I don't think that's making much sense. I still disagree with you, but that's fine. We can't agree on everything, Craig. Let's be serious. Hold on. Speaking of disagreeing, back half of the year, you're talking about healthcare, industrials, small caps. When we're sitting here around the holidays, Craig Johnson's drinking his eggnog and all this stuff. What are we going to be talking about the back half of the year? What's the conversation going to look like where we're like, wow, the leaders in the back half of the year were?
I think the leaders in the back half of the year are going to be boiled down to basically 3 different sectors. Okay. I think it's still going to be technology, but it's probably now more of the mid cap, and we can agree on that or disagree on that later. The second part of that is going to be, I think you're going to have industrials, and I think you're also going to have healthcare, but it's not large cap. It's going to be mid, small cap. It's going to be more devices and more of those kind of names. That's where I think you're going to get the growth from. And then what we're really going to be happy about and talking about as we have our eggnog, which is disgusting. But
It is. It's gross. I hate it too.
Totally gross. Only Spencer drinks that, I think. I don't know.
Spencer, it's
But-
disgusting.
I actually like it. I don't know how you knew that, but
See?
You look like the kind of guy who would like it.
Oh,
what does
gosh.
that mean?
But JC, what I think we're really going to be talking about is we're going to be talking about the catch-up trade that has taken place in the Russell 2000 kind of names. And again, these large cap names that have driven the performance thus far, they're not bad companies, but the ask is pretty high to see Meta and to see some of those kind of companies continue on at the advancing pace that they're at this point in time. Again, they've been leadership, but it's a big ask in the second half to see those large cap names continue at that
Craig,
pace.
you haven't mentioned energy once. Tell me why.
Well, as I look at the relative performance of the energy sector, I'm starting to see energy rolling over. When I go through and I look at our group work and our pieces that, like the piece we put out this morning, I'm starting to see that the energy stocks have been rolling over. They're breaking, JC, they're rolling over on a relative basis first and foremost, because that's what the institutions really care about. And we're below falling 40-week moving averages on the large cap names at this point in time. So literally the best relative performance in the market right now is coming from mid small cap industrials. It's also coming from the services sector, mid small, more so than large, and it's also coming from transportation. And then lastly, I would say you're right. You were mentioning earlier how the consumer cyclical stocks are playing catch up. They are doing that on both the large cap and also the mid small cap side of our work. And again, just for your audience to put it in perspective, we're looking at every single stock above a 25 million market cap and a $2 price to come to these conclusions. And so we're looking at 4,000 plus stocks in the marketplace every single day. And that's where the best relative strength is coming from. And when you put this all together, JC, you know this, Spencer, you know this, these are all sort of risk on type sectors. And as you come down cap, that's certainly more risk on too. So a lot of the right things are happening. And I'm expecting a lot of strategists to have to raise their year-end numbers or roll out a new 12-month objective on the market as you get through the earnings season coming up.
What about oil services? Some relative strength out of oil services. That's something I feel like we haven't seen in like, woo! When was the last time you saw some relative? You think it's just temporary? You don't buy it?
Well, the offshore looks great. But if you look at energy itself and you put it together, like you're talking about energy being 3 to 5% of the entire market when you think about 4,000 or 5,000 stocks out there. So there's just not enough cap to really, I think, move the needle for this market in the energy. And
but just because the S&P, just because it has little exposure to the S&P 500 doesn't mean that those stocks can't go up. Like we're talking about two different things here.
Oh, absolutely. They can absolutely go up. But what I'm saying is that you might get a handful of those stocks to go up, which is great. But I think you get better ability to sort of get a bigger return thinking about technology still, the industrials, and playing some catch up with some of these medical device companies that have been left behind.
I'll give you.
If I had to have a fourth JC, consumer would be there too.
Let's end with a compliment. You want to end with a Craig Johnson compliment? I'm going to give you the healthcare. You know, when you look at that XLV chart, which is the healthcare ETF, you know, you've seen massive corrections in a lot of sectors. You know, massive bear markets. And when you look at the XLV, it's kind of just traded sideways for a couple of years, right? So when you see all these downside corrections, and then you look at healthcare and it's been trading sideways, it's kind of like, it's pretty impressive, right?
It is impressive, and that's sort of what draws my attention into this is the fact that specifically on the mid small cap side, JC, it has been going sideways and starting to show some early signs of improvement. And again, the medical devices, things in here like, you know, Dexcom, and if you look at ISRG, and if you look at Zimmer Biomed and some of those kind of names, or even Medtronic or Boston, these are all decent looking charts. Yeah. And they're starting to turn. And if you listen to what the commentary was from United Healthcare, a good local Minnesota company, again, a great company, not a great stock right now, is they're telling you that there are more procedures getting done today than they've had in quite some time. So that tells me that there's going to be a lot more of these devices.
No biotechs. Right. Not excited about the bios. You're excited about small caps. You're excited about healthcare, but not bios.
XI, you know, the XBI is kind of just going sideways in here right now. I need to see more evidence. This is kind of like your marathon trade. You know, you need to see more evidence. It's your Bitcoin trade. You need more evidence before this thing really sort of says, hey, we're ready to work. Again, I agree with you. You only want to own stocks while the momentum is with you, and you want to avoid them while you're in the doldrums.
They agree on that point. Craig Johnson, great to talk to you as always. Have a good rest of your week, man.
Come back soon, Craig. That was fun.
Thank you. Talk to you later. Bye.
Definitely one of the more interesting characters out there. He was telling me how he likes to drive his truck like through his lawn when it's covered in like 8 feet of snow. He just likes to drive over his lawn, and I don't know. Anyway, he's a fun guy. Okay. This time every day is usually when we bring on Kimmy Sokoloff. So let's do that right now. Kimmy runs the Day Trader Pro trading room where she live trades the open every single day. She's giving ideas, she's giving recommendations, and she's taking positions along with you. So let's see what she's watching today.
Kimmy Sokoloff.
Hey guys. Good morning.
4 for 4 on Friday. Not bad. Not a bad day. For someone who hates trading on Fridays, 4 for 4 ain't bad, huh?
Yeah, it was a nice Friday. Cut out quick. I cut out like 10:30, 11 o'clock Friday. I was like, gotta go.
Good for you, Kimmy.
Let's
Strike
see.
it again. Let's go over a couple of these trades quick.
OIH.
Yep. Shorted
right?
OIH, bought NET, bought AMD, bought Tesla, sold all for profits. Nice. Special shout out to Mary for asking about Netflix. Shout out Mary. If you guys haven't spoken to Mary, give Mary a call and have a nice little conversation. But Google this morning, Kimmy, that's what's on your radar?
We'll see. Listen, I recommended it last week. Some people in the room took it. It was like on the break of 123. It is against resistance at the Bollinger Band at 125. So it might hover underneath here before maybe potentially breaks out. So I have to see how it acts. I'm not saying today is the day that it gets going, which it could. I mean, you never know, but it is a little extended. I wouldn't mind some basing before a push, so we'll see.
What are you thinking about this overall market? S&P above 4,500, got here pretty quick.
Very quick.
You're going with it, or you're thinking?
Well, I always do. I mean, even if I go with it, I always do counter trend trades. I think it's harder finding longs. Okay, we've had a great week. We had lots of trades, but sometimes it gets harder to find longs along the way. And the names I look at. That doesn't mean not another sector is great for something else. But
would you say it's getting harder or getting easier or not changing the ability to find longs?
No, I think it's getting harder because names are extended. So, I'll buy them for bounce trades and things like that. But, sometimes when it's extended, like look at the reversal in NVIDIA on Friday, right? Look at the reversal in Netflix on Friday, right? And it's obviously they bounce up this morning because that's typical what that does. But, it's whether they need to pull in more before they head back up or maybe needs a little break. A lot of names are outside the Bollinger Band. Sometimes they like to come back into the band before they get going again, right? So, makes it want to do I want to buy it? Like, look at AMD Friday. Okay, I sold it too soon. It ripped all the way up to 120 or something like that. And then all the way it's back down to where we bought it.
Wow. It opened at 15, went up to 120, 116 to 122, back to 116.
Right, exactly. And then
we call those what is that, a gravestone doji for those candlestick fans?
You're right, unless till someone finds let's just buy it. Sometimes they just buy stuff.
Listen, it's one candle. Okay, looking for Google from the long side. I actually shorted Meta on Friday, so I'm actually I'm short the hell out of this Meta. Tight stops, looking for something tactical. I got out of a lot of cryptocurrency stuff last week, so
yeah.
I'm in very, very high cash positions, looking to put money to work, being patient, keeping an open mind, Kimmy, keeping an open mind.
Yeah, I wouldn't mind some of these names dropping good. Like TTD is extended. I wouldn't mind a pull-in, so I'm going to look at that. Airbnb, I'm going to watch to see if it could push to a new high. It's names I'm watching. I'm not as excited about certain names today, so let me write something else. I have my little pen and paper.
Always using the pen and paper.
Always use pen and paper. Very old school. My little, here you go. Here, you want to see all my scratch?
Yes.
You want to see me scratch, and I can't even read my handwriting. Here we go.
I love it.
I can't even read it.
Neither can we.
I'm like, okay, I gotta go back. I sometimes go, what did I write?
All right, guys. Kimmy runs a live trading room called Day Trader Pro. She's there every single day trading through the open and beyond. She's calling out her trades, giving recommendations, and it's winners all the damn time. If you want to get in her room, it is not free. It is a premium service. You can either click the link in the chat, click the link in the description, or scan the QR code that I just put on the screen just now. Kimmy, as always, have a good one.
Go get him, Kimmy.
All right, I'm taking the QR code. You have 3 seconds to scan it. 3, 2. You can always pause.
Dude, she was 4 for 4 on Friday. This comes from a woman who hates trading on Fridays, and she's 4 for 4.
Yeah.
Killer.
Well,
killer.
Yeah, she's good. She's good at what she does. All right, it's 9:25. Let's do the hot corner real fast. It's been super slow, super quiet on the hot corner front, like all of last week and into this week too. So not much to discuss, but we do have a couple.
So hot right now.
All right, so the CEO of Calivo Growers, ticker CVGW, bought $2.275 million worth of stock. I've never even heard of this company before. And hey, KDP, Curry Dr. Pepper, that stock doesn't get a lot of love for whatever reason. We had some bullish, unusual options activity in that. So here's a CVGW chart. Oh, it's bunching, JC. It's bunching.
Well, so this one really, I mean, this is a $500 million company. So just keep that in mind.
Oh, it's way too small for
this is
JC.
a little, this is a little nothing. It doesn't even trade. So yeah, this is not for me. I like stocks that are liquid that I can get in and out of. This ain't that. The company offers its products under the Calivo brands and related logos. I don't know if you've ever heard of Avo Fresco, or Calavo Salsa. Any of these? I've never heard of any of these things at all. So literally, I'm looking through all of its brands. I've never heard of any of these things. But CEO just dropped $2 million on this one. Is that how that right?
Yeah,
$2 million is not nothing.
It's not nothing at all. Do we have a KDP? I'm just curious about that KDP chart. Do we have that or no? Because there we go. I don't look at this chart like hardly ever. So this is the first I'm seeing it in a long time.
Yep. So this is the new ticker symbol for Keurig Dr. Pepper. I forget when they changed the ticker symbol. So this is up to $44 billion. Did you know that this company is based out of Burlington, Massachusetts?
No, but this is the product of like a crazy merger. It's like Keurig and Green Mountain, I thought, merged, and then the one bought the other, and then they merged with Dr. Pepper, but it was like a Snapple spinoff, so it's like a whole thing. I don't know, but
you want a fun fact about this one? Fun fact about this one: they own Hawaiian Punch. Remember that one?
Oh gosh, that was the best drink as like a 10-year-old.
Totally. I drank so much Hawaiian Punch.
My
it was ridiculous.
Gosh. God only knows how poisonous that was.
It's all sugar. It's terrible for you. Are you kidding me? I drank so much of that as a kid.
Oh my
Hawaiian
goodness.
Punch. How about that? Nice shout out.
The unofficial drink of summer when you're a kid.
I grew up in Miami, so it was all year round, buddy.
Oh, okay. Yeah. We didn't all have that privilege. Anyway, KDP.
So KDP, not terrible. We had unusual options activity. How much did we get? 8,000 contracts on the offer. These are October 33s. So October 33 slightly out of the money. I don't hate this, to be perfectly honest with you. Consumer staples have gotten absolutely destroyed. So I got to tell you, if we're above 31.5 or so, I don't hate it. And if you want to show, why don't you throw up slide 8? Because in bull markets, there tends to be less of a reason to own consumer staples, low volatility stocks. These are safer havens, and in strong bull markets, there's less of a need for that. We're getting new 52-week lows in consumer staples, low volatility stocks in general, on a relative basis, making new 52-week lows. These are classic characteristics of bull market, perfectly normal. That's exactly what we've seen. If you're looking for some rotation, looking to get into some staples, this is not a terrible one. I don't hate this. Still not moving in the right direction, but coming down to some pretty interesting levels.
Yeah. All right, guys, the Hot Corner. It's a free daily note. Goes out every single day with tracks all the biggest trades from Washington to Wall Street to the boardrooms. If you want to get the Hot Corner for free, just email us. I'll put the email up on the screen right now. It's questions@stockmarketmedia.com. Shoot us a note. Say you want the Hot Corner. We'll get you on the list. Let's take a quick look at our other free daily note, the chart report, which also goes out every single day. There's our opening bell. Shout out to JC for making Friday's edition of the chart report. I wanted to scroll down though to this chart from Charlie Bellello. I admit that I don't really know how to interpret this data, but I find it interesting nonetheless. Active managers had less than 20% exposure to equities last October. Today, their equity exposure has jumped to 90%. This is the highest exposure since November of 2021.
You want to hear fun? You want to hear something funny?
Yeah,
So
always.
just a couple of months ago, when was I in Arizona, Spencer? Do you remember what day I was in Arizona?
Probably like 5 or 6 weeks ago.
So whenever that was that I was in Arizona, I think you're right. I think it was like the first week of June. I think you're probably right. I was in Arizona speaking at the annual conference for the National Association of Active Investment Managers, which is what he's describing here. And remember, if you recall, at the beginning of my presentation, I said, raise your hand if you think we're in a bear market. Everybody raise their hand. Raise your hand if you think we're in a bull market. Nobody raise your hand. Then I said, raise your hand if you think the S&P 500 closes higher at the end of the year than what we are today. Nobody raised their hand. Raise your hand if you think we close lower. Everybody raised their hand. And then I proceeded for the next hour to tell them why we're buying stocks so aggressively, and the market has done what it's done. One thing that I have found about the NAAIM, because I even told them, I was like, by the way, the rest of the market agrees with you guys, so here's why I'm taking the other side. But what I've noticed about this particular sentiment gauge, if you will, this particular poll, is that it moves with growth stocks, right? So if growth stocks are doing well, this thing's going to chase it. If growth stocks are doing poorly, they're not going to have much exposure. That's what this, in my experience, represents. And what do you know? The best performers this year have been those growth stocks, and active managers have gotten very long. Surprise, surprise. So I think that's perfectly normal. I want to point out the Willie Delwich chart of the day. Shout out Willie. Talking about how since the end of May, the median stock is actually outperforming the S&P 500. So everyone's telling you that it's just 7 stocks, and JC, bro, it's only 5 stocks, bro. We know it's not. In fact, the median stock's actually outperforming the S&P over the last couple of months. So kind of keep that in mind. So nice bringing that up, Willie Delwich. Great follow on Twitter as well. And was there any other stock that I wanted to point out? I mean, I made the top 10 list with this brilliant chart.
You did? Showing
the commercial hedgers positioning. If you want to throw that up, we can mention it. I meant to ask freaking Craig Johnson about it, so I screwed that up. The dumbest money in the world currently is at consensus that interest rates are going up and bonds are about to collapse, right? And these are the large speculators at consensus. They tend to be very, very, very wrong. And they're at consensus. They're at extreme record short positions in treasury bonds. So in other words, the dumbest money thinks is convinced and betting more aggressively than ever that this 40-year bull market in bonds is over and interest rates are just going to go up and bonds are going to completely collapse. And I don't buy it, Spencer. I don't buy it. So I'm expecting some volatility in the bond market. It's part of the reason that I'm kind of raising cash. I'm not here to drive my ship into the storm. I kind of want to ease up and check things out, see how things transpire. Here we are in the middle of summer doldrums, all that stuff. I'm just not in a position to be super aggressive. Who knows when that changes? Could be tomorrow, could be 3 months from now. I don't know. This is a really interesting one.
All right. We'll keep an eye on that. Guys, that chart that JC just showed was actually highlighted in Friday's chart report, which, as I said, goes out for free every single day. If you want to get the chart report, there is a link in the description. There's also a QR code on the screen right now. Scan that code, get the chart report for free. Don't spend all day on Twitter. Let Patrick do it for you and just put the best charts and the best tweets in an easy-to-read email. So there it is, chart report, QR code on the screen. For recess in about 20 minutes, I do have a video that was just sent to us by Sean from Manila. Apparently it's Strazza's birthday, and we have a video of that. Shout out, by the way, to Storm Gus T Gaming in the chat. Says, we're with Strazza now. We call him Steve. We're with Steven now in Manila. Somebody watching our show right now is with Steve and Sean right now. So
only in 2023, Spencer. Only in 2023.
Crazy. Okay, I did want to also mention the trade desk and Activision. So Activision looks like that deal with Microsoft is finally going through. So there's no trade there for ATVI. The stock is finally trading at its takeout price. I think is 95, and it's at 93. Yeah, so it's finally back there. Anyway, the reason the trade desk is relevant because every time there is a merger, that stock of course goes off the board. Any index that the stock is in, they need to replace that stock. So NASDAQ, we actually missed this. It was announced on Wednesday. NASDAQ announced that the NASDAQ 100 index, of which ATVI is a member, is going to add the trade desk to the NASDAQ 100. ATVI goes out, the trade desk goes in. So TTD was on my radar for that. I neglected. I missed this one on Wednesday. I apologize. I usually see this stuff as it comes out, but I didn't. So anyway, TTD, which actually had a great week last week. And it's going to be in the NASDAQ effective today, actually, effective this morning. The trade desk is officially a member of the NASDAQ 100. So I guess congrats to them. Speaking of the NASDAQ 100, we did not get a press release on Friday night elaborating on the rebalance and how they're going to do that and what they're going to add and or buy more and sell less of. But the market has pretty much concluded that they're going to be. I actually have a note here from Matt Levine at Bloomberg that market is pretty much pricing in the movement in the stocks in question already for the NASDAQ 100. But when we do find out more about that rebalance, I will share with you guys. Just mostly because it's interesting and not much else. Okay. As we open here, what else? You know what jumps out to me, JC, is all the EV stocks trading down. Any Tesla competitor is trading down today, while Tesla's trading up. That's interesting.
Like what? So like Neo.
Well, also like Ford though. Like any company with an electric truck is trading down.
Wow, look at Ford down 4%,
yeah,
gap and lower.
Look at Ford off the open. General Motors, likewise. Anybody with an Rivian, right? Anybody with an electric truck. I guess Tesla's actually making them after 4 years of hype. So,
yeah, Tesla making new 52-week highs right now. Let's see if it gives it up. We start losing. One of the things that we've seen consistently, like listen, obviously we don't know what the market's going to do moving forward. We could just weigh the evidence and see what the market does. And as the market continues to proceed, it's either confirming our initial thought or it's diverging from it. One of the things that we've seen all year is that consolidations in stocks are breaking out. Those breakouts are holding. You're getting more and more breakouts, more and more sectors and industry groups participating to the upside. Those are characteristics of bull markets. In bear markets or near turning points, maybe right before corrections, what do you tend to see? You see consolidations resolving lower. You're seeing breakouts failing, right? Those are the types of things you start to see that start to add up that ultimately lead to a longer correction, whether it might be a few weeks or a few months or even longer. And, last week we started to see some failure. This week we're starting to see some gap downs. Like, these are not the things that we're accustomed to seeing in bull markets, kind of further reiterating perhaps some caution up here, maybe, more neutral approach in equities, maybe, not just so many long positions, maybe some more short positions, maybe a 50-50 balance, maybe depending on your time horizon, more shorts than longs, right?
Yep. Hey, in that type of environment, that is, or in an environment not like we've had for the first 6 months of the year, generally speaking, like if the market were to maybe go sideways or maybe start to contract, what sectors would you look towards?
To buy or to short?
To buy. I'm assuming the defensive staples, energy, that sort of thing.
Like for some rotation to some of those defensive areas. Yeah, I don't hate that. The KDP, for example, is interesting. Costco also breaking out, kind of interesting. Really? Right? So those are some things that I'm looking at. I haven't done anything about that, to be clear. I'm more interested in, maybe having too much cash during that period, maybe, looking to buy some dips in some of the names that have been working in the first half of the year. That's sort of where my head is at. Rather than rotating into some other stuff. Remember, because if you're a long only fund manager, you need to have 90% plus of your money allocated at all times. You can't just go to cash, right? It's against your mandate. You have to be long. So the way that they do that is that their cash, if you will, is to hide out in some of the more defensive areas like consumer staples, for example, or even some other areas. But consumer staples, low volatility in general. I don't have to do that. I don't have a long only mandate. I could press a button right now and be 100% in cash if I wanted to, or 100% short, or 200% short. I can do anything I want, and 99.99% of investors can also do that. So, but it's important to understand how the buy side works and the things that they have to do. And consumer staples tend to be one of those. You can do that if you want. I don't have to do that, and I probably won't.
Yeah. Going both ways can be helpful.
Yeah.
Markets don't always go up as much as sometimes we wish they would. Okay. What else? Oh, you know what I wanted to bring up, even though it's not relevant for today's show. Can we bring up slide 20, please? Just so everyone gets an idea of what is to come this week. It's going to be a doozy. So today's a very quiet day on the earnings front, and it's probably the last quiet day for 3 weeks, maybe more, maybe 4 weeks. So we've got tomorrow kind of the rest of the banks: Bank of America, Morgan Stanley, Charles Schwab, PNC, BNY Mellon, all in the morning. But you can see that Wednesday and Thursday, things start to pick up here. I have a chart I'm looking at on my screen of the daily market cap of S&P 500 earnings companies reporting. And this data is a couple days old, but there is almost $900. I'm sorry, $900 million. What did I say? Million? $900 billion with a B dollars worth of companies reporting on Wednesday. A lot of that is Tesla, obviously, but it's one of the biggest days of the year, at least of the cycle. We've got Tesla, we've got Netflix.
But what does that mean? 100 billion in like actual earnings?
900 billion in daily in market cap of. Oh no, because Tesla's $900 billion.
Yeah.
So
what are you talking about?
Tesla's 900 billion, give or take, right? So yeah, it's way above that. I'm looking at. I misread the chart. I'm sorry. The point is, Wednesday is the 6th largest day in terms of just market cap reporting, if that makes sense. Just
big day for earnings junkies.
It's a big day for earnings junkies. Wednesday and then Thursday, those are usually the biggest days of the week. And so it's going to be a heavy earnings flow basically from here on out, which is exciting because it creates volatility, which we love to see.
Spencer loves earnings. Let me talk about something that's not reporting for another 6 weeks or so, and that is slide number 9. Throw that one up there. I tweeted it out this weekend, kind of just asking, like, hey, time to step in, buy this dip a little, kind of just asking. And the Twitterati went wild, right? Tweets going viral. Everyone's freaking out. Very opinionated. Either definitely buy it or definitely don't buy it. A lot of opinions on Zoom, which is interesting. Kind of random. Like, why do so many people care about Zoom, Spencer?
Because it is as representative, if not more, of the pandemic asset bubble, post-pandemic asset bubble. If there are two poster children of that time, they are ARK and Zoom, in my opinion.
Well, Zoom is the 4th largest component of ARK.
Right.
ARKK, so that makes sense. It's no longer in the IPO index. It used to be the largest component of that IPO index. I guess it's been public for too long now to be able to fit that.
Well, yeah, they've been public for 4 years now, so they generally get. Oh, I think.
And a great example, Spencer, of that initial IPO. Look at the lows for the IPO. That ended up being the low at the end of 2019 pre-COVID. It was the low last year. It was the low this year.
I think the all-time low in Zoom is still from its opening day.
Yeah,
$59.
Yeah, and look at it right now. right? Continuing to find support at those levels. So when we talk about how we trade IPOs, those initial prices come back into play in the future. And sure enough, here we are 4 years later, still coming into play. There's a lot of market memory here. I honestly didn't realize that the Twitterati would be so opinionated on this. I mean, my tweets, I don't really have a lot of followers on Twitter, but my tweets don't normally get 400 likes, 120 comments. Are you kidding me? People are freaking out.
What were they saying though?
I mean, you can go back and look for yourself, but they were saying all kinds of stuff. Like there wasn't like a consensus. It was kind of all over the place, but very opinionated. Like you have to buy it down here. This is it. Or this thing's the biggest piece of hot garbage. Everybody uses Google. It's going to zero. You know, so I don't know. I don't know anything about the fundamentals of this company. Quite frankly, I don't care either. But I will say that if you're going to be buying the stock, this is where you do it. I will also say if we break this support and we break those IPO lows, is it a short with a target of zero? Probably, right?
I don't know if I would go all the way down there, but there would be no other level. There would be no price memory at anywhere else. So,
right.
In theory,
support at zero.
There's always support at zero.
Oh, not in crude oil a couple of years ago, my friend.
Speaking of support at zero, I've seen a number of mentions in the last week or two just about how bad all the cannabis ETFs and cannabis stocks are doing. I once upon a time I owned a whole bunch of cannabis stocks. I don't anymore. But I'm looking at like the MJ or what's the other MSOS is the other JC, talk me out of this MSOS here.
Do you really need me to? I mean,
it's got support of 5. It's at $6.
Yeah. I mean, anybody want to? Fonz, you want to throw up that chart? I mean, we can. This thing is. I mean, I'll throw it up right now. Here, slide 1 there on the MSOS. This thing's a real piece of hot garbage. If you need me to convince you to not own this,
wait. If you're gonna buy Zoom, why can't I buy MSOS?
First of all, I haven't bought Zoom.
Okay, I said if you're gonna.
I was mostly just talking about how wild the Twitterati got about it, and I was wondering why anybody cares about this thing, right? This is MSOS. I mean, this thing's the biggest piece of hot garbage ever.
It is. It's real bad. It's real bad.
Yeah, this one coming from Advisor Shares. I mean, like it's tough. Like this thing is real nasty. I mean, I wouldn't even be able to begin to tell you where I would get interested. I mean, maybe we start taking out 6.5 to the upside.
All right.
Maybe. You know, maybe not even like. Maybe above 6.5, you could start nibbling. Maybe if you really have to, but this thing is just like, for what? For what?
Yeah, for what? That's a good question. For what? For 50 cents? I don't know. Evan, the intern, who we maybe should get on the show this week.
Yeah,
we should get Evan chiming in to say MSOS. It may have support of 5, but it's got resistance at 650. So.
There you go. Someone's looking at these charts. Shout out Evan the intern.
Evan the intern. We'll get him on the show this week for sure. He has been crushing it. This guy sends us charts at like 10 p.m. on Sunday night. Like he's just ripping through charts.
Well, he's in college. They got all the time in the world.
It's summer. It's summer. He doesn't.
He's college. I remember when I had a lot of time on my hands. What did I do with all that time? I was probably charting it on Sunday nights. I do that now.
You probably were. All right. Should we hit some recess? By the way, if you have any questions in the chat, drop them in there. We got about 10 minutes left in the show, but let's do some recess and then we'll see where that takes us. Where's my little or. Oh, I lost my background. Where's my recess bumper, though? Oh, there it is. Should I play this video?
Play it.
Okay. Have you seen it? Because I haven't.
I have not. I'm a little bit nervous. Why don't you set the stage so people know
this is a video that was sent to us from Sean McLaughlin about a half hour ago. He said, play it during recess. This just happened. I don't know what it is. I don't know if it's funny or embarrassing or neither. I don't even know how long it is.
So hold on. Sean and Strazza are in Asia. They're currently in Manila, in the Philippines, and it's Strazza's birthday.
All right. Sorry, I interrupted you.
No. Go ahead. Just set the stage. Go ahead.
Yeah, all right. I'm gonna make it full screen.
All right.
And it's vertical. It's vertical. That's funny. That in itself is funny.
We got to tell these guys to do it horizontally. What are they doing here?
Wait. What is it on? What is on his head? What is that?
I think those are sunglasses.
Oh, okay. Look at all the food. Okay, here we go.
Happy birthday to you. Happy birthday, happy birthday, happy birthday to you.
Happy birthday, sir. Thank you so much. Have a long out. Thank you, guys. Thanks, everybody.
Are they eating flan?
I don't ask me what that food was. I have no idea. I don't even think Steve knows what he's eating.
Well, there's a lot of Spanish influence in the Philippines. You know, you go to old Manila, and it feels like you're in Coral Gables. Like all the street names are like, all the street names are like San Agustin, like San Antonio. Like it's all like Spanish saints and stuff like that. Like it's pretty funny. And all the people in Manila, not all of you, but a lot of people in Manila have Spanish accents, and they actually pronounce all of these street names perfectly, but none of them speak any Spanish. It's kind of, it's really interesting actually.
That is interesting. All right. Yeah. That was fun. Happy birthday, Strazza. I don't know if he's still watching this. Probably not, but
I wouldn't if I were in Asia right now. I wouldn't be watching the two of us. I'd be having a good time.
Yeah, I know. All right. Recess. You got anything? That was fun.
Yeah, no, I just think it's funny. A funny little thing happened to me over the weekend. One of my best friends from college came to visit with his pregnant wife, who's 6 months in. And they haven't hung out with babies or little kids at all in their lives. So this whole parenting thing is new. So they spent an afternoon and evening with us, and got a full dose of what it's like to have 3 kids under 3. And they were like, "Wow, so it never ends, huh?" It's like, nope. So I want to, for new parents out there, or if you're going to be a new parent, they got these. I'll get you the brand, but they got these formula makers. It's like a Keurig for formula, and I didn't have it with my daughter for my first child because I didn't know it existed, and I didn't think it was necessary. So like we went old school, like you heat up the bottle, everything like that. And when you got a screaming kid, now you got to heat up the bottle, then you test it. Oh, it's not hot enough. Then you put it back in. Now you test it. Now it's too hot. Now you got to wait. Meanwhile, the kid's screaming. That's no fun. But we got twins.
Wait,
so
can I interrupt you for 1 second?
Yes.
Sorry. Kimmy just bought Zoom for a day trade.
Ooh, Kimmy buying Zoom.
Kimmy just bought Zoom at $71.69.
I like it. All right. I'm gonna let it dance a little. I might be in there with her. But so with twins, I got the Keurig for formula because we don't have a choice. So I was showing my friends. I'm like, look how awesome this thing is. You press the button, it spins. You don't even have to shake it. It just works. It's fantastic. If I had to do it all over again, I would have had it for when I had one child. With 2, you need it, no choice. But with 1, I used to think it was kind of like a nice to have, not a need. But now in hindsight, I think you spend the money. It's like a couple $100 or something like that. I think you get it. I'll get you the name of it.
Rachel says it's Brezza, I think. Is that it?
Ooh, I think that's right. Yeah, Rachel knows. Look at Rachel coming in with the clutch. Yeah.
Speaking of babies, I also hung out with a baby over the weekend. I met my cousin's newborn for the first time. They live out in California. This baby is less than a year old, and first new baby in my family in 21 years in this side of the family in 21 years. So very exciting. And that was, I have no experience with babies, right? So every time I'm with a baby, I don't know what to do. You know what I mean?
Yeah, that was me before I had my first kid, and you become an expert right away. I want to change the subject here. I want to give a shout out. Speaking of Spain, to Carlos Alcaraz winning the Wimbledon tournament.
Oh, I did you watch the half hour game? There was one game in the match yesterday. I think it was the 3rd set, and it took a half hour for one game. It was insane.
Yep. I think it's like the first time in like 20 years that it's not Federer or a few of these other guys, right?
Well,
Djokovic,
Djokovic has won like 4 in a row or something. So,
right?
yeah,
And then,
Alcaraz is just a monster. He's 20 years old, man. He's a monster.
right. So what is it? Andy Murray, Djokovic,
Yeah, Murray, Federer, Djokovic, and Nadal.
and Nadal. And it's been only those 4 over the last 20 years or something until now. So that's pretty cool.
Yep. It was a really great match, man. Yeah, I'm getting really into tennis now.
I've been playing a ton of tennis, dude. By a ton of tennis, I played like 3 times in the last couple of weeks. But
right.
You know, I used to play back in the day when I lived in the city. I'd play in Hoboken because I had friends that lived in Hoboken.
Right.
I would play in North Bergen. I play all the time. I used to play a lot of tennis. I like that I'm getting back into it a little bit.
Okay, recess is a reminder that the Barbie movie premieres on Friday. I will not be able to see it this weekend, sadly, but I did sell my Mattel, buy the rumor, sell the news, so I'm out of that thing. Had a red day on Friday. I sold it around 10 o'clock in the morning, I think, somewhere around there, 10:30 in the morning. Anyway, so that was fun while it lasted. I'm looking for a new short-term trade on the YOLO account. Any ideas? Besides MSOS, let me know. Okay.
You don't like shorting Meta with your boy here?
This account does not have. It's not I don't have a margin account on this account. I can short in my Fidelity account. I'd prefer not to, but I could. This other account, this Webull account, has a much smaller balance.
Shorting stocks is as American as it gets, Spencer. You know, we just had 4th of July. You know, people are like, "Oh, it's un-American to short stocks." Are you kidding me? If you're a shitty company, I'm going to short it to 0. That's not my problem. It's the American way to short stocks. Good companies go up, bad companies go down. There's nothing wrong with that. Short the hell out of something you think is going lower. That's the American way.
Yeah. On that note, if you ever see like a short report or something, or people coming out against a company, and the executives come out and they blame like short sellers for the reason their stock is down.
Short more.
Yeah, exactly. Short more. Like, if your defense for the reason your stock is down is that the evil shorts are rallying against you, oh boy. Not great, Bob.
Lehman Brothers. Lehman Brothers.
There have been many more since then. My recess is over the weekend. I took a day trip to the beach. I brought with me Josh Brown's book, Backstage Wall Street. I'm about a third of the way through. It's about 10 years old now, the book itself. So some parts of it surprisingly are a little dated, but it by and large holds up incredibly well. And it's again, I'm only a third of the way through, but it's a really great read. So I thought you'd appreciate that, JC, because
I know the book well.
Yep.
Josh has been a good friend of mine for many years. In fact, a few of those chapters I was in there. He doesn't mention me by name, but I was in that Jamba Juice meeting. Have you gotten to that?
All right, I didn't get there yet.
So in the Jamba Juice meeting, when the CEO is like, if you are, I think the CEO said something like, it's in the book. He said something like, if you are buying this stock because you think it's going to go up in price, like, we don't want you to be a shareholder, or something crazy like that. And me and Josh look at each other like, wait, did he just say that? And then the stock just immediately went down from there and never turned around.
What the hell happened to Jamba Juice? They were everywhere like 10 years ago.
It's like a smoothie. There used to be one in Bryant Park, and we would go get like rum and get like one of those mango smoothies and put the rum in and go hang out in Bryant Park and just kind of hang out. Used to be right on 42nd Street.
Holy crap. Jamba went public via a SPAC in 2006.
Yeah, it did.
Wow.
I used to trade the Jamba warrants. JMBAW. I was in the Jamba warrants way back when.
Gosh.
So just to show you how far I've been around. But yeah, Backstage Wall Street, great book. If you're interested in the way the Wall Street actually works, most people are unaware because they're not in this business like we have been for so long, and and know the bad things about it and all the great things about it. If you're really interested
and
in
Josh
how
is
the
a really gifted writer on to boot.
Yeah.
So
Yeah, for sure.
he's a great storyteller. All right, guys, it's 10 o'clock. We're gonna go. Before we go, can we bring up the calendar real fast, Alfonso? The programming calendar for the week, so you can see what is coming up on the channel here on Stock Market TV. Today, not much. Quiet day. Tomorrow, CRL Chart Request Live. We got What the Fick. The Hot Corner will be back later on in the week, as will Lunch and Learn, as will Trend Lines Over Headlines. So stay tuned for all of that. Thanks to our guests, Craig Johnson and Kimmy Sokoloff. Thanks to all of you watching in our chat. Thanks to our chart ninja, Alfonso, in the background. We're whipping up charts as we speak. He's a monster. We appreciate him as always. Thanks to you for watching. Smash the like and go make some money. We'll see you guys later.
Adios.
Run it. I can't take no loss. I don't even know what it costs.